Yesterday we discussed about the auditing definition and characteristics. This was the definition we have done yesterday session. According to ICAI, what is the meaning of auditing? It is a systematic and independent examination of the statements, records, information or a performance of an entity for a stated purpose. In any auditing situation, auditor has to pursues and recognizes prepositions before him, collects the evidence, evaluates the same, and form the judgment which is communicated in the form of audit report. It is a systematic. Systematic means predefined, nothing but a pre-planned. Independent. Independence. Auditor must have independence. What is the meaning of independence? Auditor's work is not determined by any person. Auditor must have a freedom, unrestricted independence, unrestricted freedom to access any data, information within the entity. He was not forced that you should not access the so-and-so record, you should not do audit of the so-and-so document. No. He must have a unrestricted freedom to access the record. Independence of the, independence of auditor, short answer question also important, do remember. And of course, this point and essentials we have done, guys. And one concept I told in the previous class, that is the true and fair view. Again, wherever necessary, I will elaborate. Now see this. What is the audit object? Auditor's objectives are two types. Primary objective, secondary objective. What is the primary objective? Only to certify that the financial statements are representing true and fair view. That's the primary objective. The primary objective of any auditor is to certify that the financial statements are representing true and fair view. What is the concept of the true and fair view? No asset is neither overvalued nor undervalued. Yesterday, we have done this point. I gave some synopsis for them. No asset is neither overvalued nor undervalued. And here, assets point of view, 3 points are there. No asset is neither overvalued nor undervalued. If you provide the more depreciation, less depreciation. Other one is there is no unrecorded asset in the books of accounts. Transaction occurred means entries are made in the records. Third one, all material changes in the books of accounts, especially assets, were properly recorded. No liability is neither overvalued nor undervalued. The balance sheet, this is called financial reporting framework. Financial reporting framework. This is nothing but a format. P&L account is prepared according to part B of the schedule 3. Balance sheet is prepared according to part A of the schedule 3. Whether that format is followed or not. Then any changes in the account, nothing but a consistency in accounting policy. There should be some consistency in accounting policy. You can't change accounting policy as you like. It has to be followed persistently. If there is any change, it should be reported. And when accounting policy can be changed, change of accounting policy, AP means accounting policy. When it can be changed, when law requires, law was amended, change it. Second one, ICAI gave the pronouncement, we have to change it. And lastly, in case of if I change accounting policy, I can present my reports in a better manner. Change. Otherwise, you can't change accounting policy as you like. Whenever some change in accounting policy, best example, depreciation, straight line to diminishing, diminishing to straight line, whatever. Whenever there is a change in depreciation policy, our profits may either increase or decrease. I am converting from changing from straight line to diminishing. My profits are abnormally increasing, assume. Our profits are abnormally reducing. Whatever may be the consequence, it has to be reported. And again remember, Minor variations are there. Nothing but the change is the retrospective or prospective. That's the question. Now I am changing the depreciation policy. Is this the retrospective or prospective? If the change in depreciation policy result in not material effect in the financial statements, not substantially changing, go with prospective. Nothing but from now onwards, at future you can apply it. If there is a substantial change in the profit or a loss, nothing but abnormal fluctuations are coming, then you have to go for retrospective. From the beginning of the company, you have to apply this. Nothing but a change of depreciation policy, either retrospective or prospective means, remember, because of the change, if there is a no material effect in the profit or loss, prospective. If there is a material effect, then retrospective. From the past you have to apply, and you have to revisit your financial statements. Again, we have to restate the financial statements. We have again one chapter at the end, we will discuss that. And finally, all unusual, exceptional, non-recurring items should be shown separately. Those were the 6 or 7 points for the your true or fair concept, true and fair view concept. So remember, true and fair view means all 7 points are there. No assets point of view 3, liability point of view 1, format point of view 1, accounting policy point of view 1, and last one is unusual items 1. So like this, you remember this concept, easy to recollect and reproduce the concept. Short answer question, that is. So here, what is the primary objective of auditor in this case? The primary objective of audit is to certify that the financial statements are representing the true and fair view. What is the true and fair view? At a nutshell, again guys, no asset is neither overvalued nor undervalued. All material changes in the assets are properly recorded. There are no unrecorded assets in the books of accounts. No liability is neither overvalued nor undervalued. Balance sheet is prepared according to Part A of the Schedule 3. P&L account is prepared according to Part B of the Schedule 3 of Companies Act 2. That is called Financial Reporting Framework. Wherever you come across this word, financial reporting framework, you have to recollect that he was asking about format, whether that prescribed format is followed or not. You have to certify, right? And you have to certify on that. Then depreciation accounting policies, there is a consistency, you have to certify. Finally, all unusual, exceptional, non-recurring items are shown separate. What are unusual, exceptional items? Winning from lottery, unusual item. Winning from horses. Remember, income tax, income from other sources are there usually, except dividend and all, it comes under this category, right? So, true and fair view. So, you are appointed as an auditor. What is our primary objective? We have to certify that the financial statements of the entity are representing true and fair view. There is one concept here, verify. True and fair view, you have to certify. We have certified means the 7 points are, you are certifying that yes, I have referred all those areas. It is giving the true picture. The financial position of the company as well as the financial performance of the business. What is the financial position? Balance sheet. Financial performance, operational efficiency, nothing but a profitability. What is the profit or loss? In the balance sheet, whatever information they are disclosed, that is genuine. There is no fake information, false information. There is no window dressing. Second one, in the financial performance, in the P&L account, whatever the net profit or net loss they have stated is genuine. It was properly done as per the requirements of the, you have to state on. So, the primary objective is only to certify the financial books of accounts of the entity are representing true and fair view. Primary objective. Let me read this paragraph. The main objective of an audit is to determine whether the financial statements present the true and fair view of the financial position, financial performance of the business during the period. Audit is always for 1 year, 1st April to 31st March. I am giving a certificate of the and any financial statement means one period only, that is for 12 months. Of course, Q1, Q2, Q3, Q4 audit may be there, and I may report for them quarterly reports, but the end report is the final report for it. And the balance sheet shows the financial position on a particular date, as on so and so 31st March, so and so year. And the profit and loss account shows the financial performance of the entity over a particular period. In case of a trading concern, in case of a non-trading concern, income and expenditure account we have to verify and see to that surplus of income over expenditure. Otherwise, surplus of expenditure over the income. I hope you know NTC accounts, we have to draft that one. And finally, according to section 143 of the Companies Act, nothing but rights and duties of the auditor. Later part of company law, when we discuss auditors chapter, section 139 to 148 speaks about company audit, including cost auditor. We'll discuss in the due course. Right now, 143, nothing but rights and duties of the auditor. It's the duties of auditor especially. 143, the auditor of a company state in his opinion the financial statements are present true and fair view of the company affairs at the end of the financial year, the profit and loss account of the year, so that in his opinion by the auditor increases the reliability of the company's financial statements. Once the auditor certified the financial statements, there is a reliability. One can trust. For example, you have a 30 years of the experience as an accountant, senior most accountant, man of values, right? But you are just BCom qualified or MCom qualified, worked as an accountant, senior accountant or accounts manager. If you certify some data, believing that will any banker give a loan to you? Despite to have a integrity. Whereas a qualified CA passed through the examination, got a membership, and if he signed a document, only 1 year experience is there as a practitioner. Once he, not even 1 year, 1 day also there, once he is signed and a membership is there, auditor certification is called a reliance will come. Banker believe, all statutory authorities believe that data, they are ready to give any number of loans towards that entity. That's why under authority you can sign. Despite not having any experience also, your signature carries weightage. That's why auditor has to maintain integrity. So primary responsibility is only to reflect the certify that financial statements are representing true and fair view. And the financial position of a company, financial performance of a company is representing as per the requirements under 143 of the Companies Act. Primary objective. What is the secondary objective? You are appointed as an auditor. While doing the audit, you may come across certain irregularities, maybe some error, some fraud. Errors are there, then and there you can correct it. Fraud is there. Fraud has to be reported according to section 143 subsection 12. You have to report to the government. For example, fraud amount is 1 crore and more, report to central government. If the fraud amount is less than 1 crore, report to management. That is the from the date you have detected the fraud, immediately you have to communicate to authority. Less than 1 crore, management. More than 1 crore, report to central government. For the needful action on that chapter is there for us, how to treat the detection of a fraud and all. Here our point is, your primary objective is only to certify that books of accounts are representing true and fair. Yes. What is the secondary objective? While doing audit, if I have detected any irregularity, fraud and etc., I have to report to management. But remember, sir, as an auditor, Before I commence the work, I never start a work with a predetermined plan that I am going to detect some fraud. I am not suspicious. When I start my audit work, I start with open mind. In this organization, the management is doing the required things. What are that management has to do? Selecting the appropriate accounting system suitable to the business entity, single entry or double entry based on the nature of organization. Company point of view, double entry system only you have to select. Second one, designing the proper internal control system suitable for entity. What are the internal controls? The internal controls are nothing but if you do remember in the previous class, did I told about internal controls yesterday? Okay. Internal controls about internal controls are nothing but your rules and regulations for the internal management of the entity. In order to accomplish internal goals, nothing but every organization is having certain objectives. In order to accomplish your organizational objectives, what are the do's and don'ts? They have to define. That is called internal control system. In the internal control system, rules related to management and administration. Second one I said accounting and finance. Third one operations. Fourth one compliance. Regarding these four areas, we have to define the internal control. For a partnership, we have the partnership deed for internal management. For a company, we have articles of association for internal management. So that every company is having one internal control system. So management is responsible for selecting the suitable accounting system, drafting the internal controls which are safeguarding assets of the entity. The internal control purpose is no one can access the company's property without prior permission. Even if you want to access a computer monitor also, you need to procedure has to be followed. You go to industry tomorrow for employment, you will understand. This is not just like our domestic house. No? In the company, whichever property you want to access, proper procedures will be. Nothing but it is intention is safeguard the company's property. There is no misuse by anyone within the entity. Those rules they have to define. So management is responsible for what here? First one, so deciding accounting system. Second one, internal control. What is the purpose of internal controls? To have a efficient and effective management of organization. Day one, you can't define the effective internal control system. Some loopholes will be there over a period of time. You have to know our weakness, how to plug it, again weakness identified, again plug it. Over a period of time, definitely you can have a best internal controls within the entity. It won't take much time. So internal control, management is responsible. Third one, accounts are maintained by whom? Management. So you give the data. That data I am verifying. While verifying, if I detect any irregularity, I have to report. But remember, as an auditor, I want to commence my work with a predetermined mindset. I am going to detect a fraud. While doing the process, while doing audit, if I have come across any irregularity, I report. That's why the primary objective is only to certify that the books of accounts are representing true and fair view, but not a detection of fraud. That's what I am trying to say. In our examination, question will come. The main objective of the audit is the detection of the fraud and error. Despite telling, students will write true. Seriously. At least a few handful students I can see they write true. The main objective of audit, main objective means a primary objective. The main objective of audit is only to certify that books of accounts are representing true and fair. What is our primary objective? What is our secondary objective? If I am there in our place, I would answer. My primary objective is pass examination 40-50. Secondary objective, any rank. My primary objective what? Passing of exam, bhaiya. है ना 40-50 बस है बस. Primary objective. Secondary objective, if I get more than that, anything over and above, even 1 mark also bonus. 80 marks also bonus. I don't want. Here also I go for audit, certify. Books are representing true and fair. What is secondary objective? While doing audit, if I come across any irregularity, financial irregularities or mismanagement or a material misstatement. What are the material misstatements? Tell me guys, yesterday I told you. What are those? ACDP. Material misstatements in the books of accounts. Nothing but a certain irregularity. ACDP. What is A? A for amount, C for classification, P for presentation, D for disclosure. Amount point of view mistakes may be there. Classification, capital expenditure as the revenue expenditure and vice versa. And disclosure point of view, some information was not properly disclosed. Concealment. Otherwise, presentation. You have to present according to financial reporting framework. Formats has to be followed or not. ACDP. Remember the simple word. ACDP is a material misstatement. So you have to certify. Secondary objective one. Now see the second paragraph, please. Secondary objective. Auditor is also responsible for the detecting the fraud and errors. I think you know the difference between fraud and error. Errors are unintentional. Fraud is intentional. Error can be detected easily, but fraud cannot be detected easily. Unless you investigate, fraud cannot be detected. Because fraud will be done in a orderly manner. It looks like easy. Same transaction, genuine transaction. In fact, it was not. Unless you investigate, you don't know that. Whereas the errors are unintentional, easy to detect also, easy to ratify it. Fine. In the books of accounts and financial records of the client business, such detection of the fraud and error is called secondary objective of the audit, because the primary responsibility for safeguarding the business assets rests in the hands of the management. Auditor suspects the presence of the material misstatement or a defalcation in the records of the business. Be expected to be in the and expected to look into the matters with greater details by applying the various audit procedure. Audit procedure is nothing but you can go with whether watching or a verification, any technique can be adopted there. Analytical procedures you can follow, anything. And to satisfy himself about their existence or non-existence, he is also report on existence of the misstatement and their magnitude. Nothing but what is the effective. Minor effects are there. In the accounts to note you can write. Major effects are there, nothing but substantially affecting. It has to be brought to the notice of the manager. 10 rupees fraud. You need not give a highlighting the 10 rupees fraud. Whereas the 100 crores fraud, it has to be immediately brought to the notice and action should be taken over that by the central government. And magnitude through his auditor's report. And in the process of adhering the above objectives, the audit also attains a certain social objectives. What are the social objectives? Before that, are you clear with these 2 points, guys? Primary objective, secondary objective. At a nutshell, what is the primary objective? 1 line sentence. The primary objective of any auditor is to certify that books of accounts are representing true and fair view about the financial position and the financial performance of the client business. Secondary objective, while doing the audit, if auditor has detected any kind of a fraud and errors, it has to be brought to the notice of the client and see to that what is the magnitude, effect of that fraud or irregular errors should be reflected in his auditor's report. It can be summarized in our own words without changing the meaning. The primary objective is always to certify true and fair review. Please remember this. Okay, what are the other social objectives now? To protect the shareholders' interest, of course. If you do the audit means shareholders' investment got a protection for that. Second one, it stops the evasion of the tax. If you want to pay the proper taxation, audit is compulsory. Of course, audit will help you how to evade the tax also. Don't adopt any kind of such a method, and a fair policy has to be there. And to safeguard against the capital erosion, yes, people can't misappropriate the capital funds, and ensure that fair returns on the investors. This is called ROI in the form of dividend. Return on investment. I invested in our company, then I am expecting some returns on that. As a landlord, you are getting a rent. As a creditor, you are getting an interest. But as an investor, what I will get? Some returns on my investment, nothing but a dividend. If there is a proper audit, knowing that profitability, board of directors may go for announcement of a interim dividend or a annual dividend at the end of the period. To know exact profits of the entity, audit is going to be helpful. On the other hand, to ensure that a reasonable price to the customers. How to fix the price? And cost sheet, no? Direct material, direct labor, direct expenses, prime cost, then overheads, then factory overheads, then office and administrative overheads, cost of the production, then you have to add the selling and distribution, and then cost of the sales. Then what should be our profit? Then you have, in order to decide that profit, I must know what is the cost of the production. For that, genuine data is available. Wrong information is there, I can't fix the price properly. There should be the adequate information, sufficient information, so that I can fix the prices properly. Otherwise, if I underestimate, loss will be there. If I overestimate, cost of the product will be the more, and it may result in heavy loss for the business also other hand. And finally, to ensure the fair compensation to the workers. Workers also expecting something from entity. What for? In the form of a bonus. Profits are there. I think you remember allocable surplus, available surplus, code of wages. Studied? Might be seen the video classes. That time you are all writing your exam. So code of wages, if you remember those points, this will be handy. Nothing but a minimum wages. How much? Of course. Now point is here. What is the minimum bonus? 8.33% of the wage or salary or 100 rupees. Maximum bonus is 20% of the wage or salary. Then how to calculate? Based on the allocable surplus, available surplus. That available surplus is calculated based on the gross profit only. The gross profit will come only through audit. So is linked in. That's why if you want to understand the auditing concept, you should have basic knowledge about the different subjects. Then only this concept you can draw the interpretations fairly. So workers are expecting, I want more salary. What management will say? Already losses are there. How can I give increments for you? No increments. Interested to work, otherwise go off. No problem. More profits are there, but not giving increment, they can question me. There's a way they can ask. Losses are, they also won't expect anything from me. Thereby, organization point of view, employee fair compensation, definitely this would be handy. It can convince the trade unions. You need not go on a strike, etc. etc. Fine. So this is about objectives. So here 2 points are already covered from examination point of view. Very, very important and true and fair you direct question. Otherwise, what is the objective of audit? Maybe a primary objective or secondary objective. Usually, objectives of audit short answer question. Do remember, guys, 2 topics are equally important. Shall I continue further there? Okay. What is the scope of auditing? In case of a scope, just let us see here. While discharging their stewardship role, the management furnishes various reports regarding including the financial statements, to the shareholders, stating the utilization of the resources, financial performance, and state of affairs of the entity. However, the problem that always exists is the credibility of the report. As a management, you are drafting the financial statements. What are the financial statements here? Trading account, profit and loss account, balance sheet, cash flow statements, notes to accounts. These are all comes under the category of the financial statements. Who is the responsible for keeping the books of accounts? Management. While recording the entries, it may be manipulations can be done. Window dressing. Though organization is not performing well, as if it is performing well, we can manipulate the records. There were no sales as if there were sales. We can show April sales as a March sales. Window dressing can be done. Because as an auditor, remember the definition? It is a systematic and independent examination of the statement, data, records, information, performance of entity. When I come there, already records are ready. I collect the data from you. That data I am going to critically examine. Data already prepared by management. What is the guarantee? The data maintained by you is free from all types of the weaknesses. It may be manipulated one. Because I am not going to verify each and every transaction as an auditor. I go with only test checking. Thereby, reliance I am placing on your data. It may be fake data, false information, manipulated data. Then based on that, I am going to certify. You know pretty well, losses are going to take place. You may reduce the rate of dividend. You may show some expenses less. Sales may be more. Definitely profit can be shown. You will take your salary as a director, 11% of net profit. Who is going to ask you, man? Because some data is, for example, if you are an auditor, if you come to your client, if you come here, I will give my books. Do you have any doubt on my books immediately? Would you suspect? No, you believe me. But I know this is the false information, wrong information, manipulated. Best example, Satyam. Satyam case only, na? Not only Satyam case. Worldwide, financial best scams are there. WorldCom, Xerox, Quest, Satyam, Enron. My God, huge amount of irregularities despite having a internal and external auditors. Anyway, my contention is credibility of the report can be doubted there because the certain contain the errors means the books of accounts may contain the errors, may not be disclosed the frauds, may be inadvertently misleading. Inadvertently means accidentally. Inadvertency means accidentally it may mislead you, may be deliberately misleading, may fails to disclose the relevant information, may fails to conform the regulations, may fail to conform to regulations, which means non-compliance of the rules and regulations laid down by the law. Though compliances were not made, as if made. For example, 31st July, last day for submission of income tax returns, not filed, and penalty was levied. Are you going to disclose because of this reason? Simply they write penalty. They won't write any reasons for that. Again, auditor has to examine on that. If he was ignorant of that, there is a delay in submission of the returns. Why there is a non-compliance? And the provident fund amount was deducted. It has to be deposited timely. If not, you have to pay penalty on that. So we have to examine diligent as an auditor. The solution to this problem is the credibility lies in appointing an independent person called auditor to investigate the report and submit the findings. Ensure that whatever may be the report you are giving, as a management, I must see to that whatever the books were given to the auditor, you must examine there is no window dressing in the books of accounts. Simple worded. Moreover, the modern companies can be very large with multinational activities. Preparation of accounts of such group is a complex operation involving the bringing together and summarizing the accounts of the subsidiary with the different conventions, legal system, accounting and control system. This is applicable in case of a MNC point of view. Our companies are there in India, Asia, as well as the European countries and other countries. Then each country legal systems are different. We close accounts by 31st March. They are doing accounts with January to December. There is a clash. People won't understand. So several limitations will be there again. You can't give the consortium as a whole. You have to give the report. It's a difficult. The verification of such accounts by independent expert trained in the assessment of the financial information is beneficial to those who control and operate such organizations as well as to owners of the and outside. Many financial statements must be conformed to the statutory and other requirements. The financial statements need to prepare according to the statutory. Yours is a company as per Companies Act. Yours is a bank as per Banking Regulation Act. Yours is electricity company as per the Electricity Act. Yours is insurance according to Insurance Act. Certain compliances you have to fulfill. And all company accounts have to be conformed to the requirements of the Companies Act 2013. In addition, all accounts should conform to the requirements of accounting standards of India, that is the Indian accounting standards. It is essential that an audit should be carried out on a financial statements to ensure that they conform to these requirements. And remember, when you are doing audit, see to that accounts are prepared in conformity with accounting standards. Wherever applicable, accounting standards has to be followed. Followed or not, verify. If case not followed, state the reasons. Notes to accounts you have to check. Otherwise, qualify. Auditor has to report it. And in case of deliberate departures from accounting standard, it has to be reported by auditor. You have to notice applicable accounting standards are followed or not. Followed, well and good. Not followed, reasons. In case a deliberate departure from accounting standards, so what were the magnitude of that? Because of not following that, what is the effect on the financial statement? So you have to report in your auditor's report. And the task of auditors of the great importance in all the concerns. Auditor must prepare his report impartially and effectively based on the facts and actual figures. The following are the significance can be expected from auditing. Of course, I don't see this is much importance from examination. Of course, expected, the unexpected is the always a buzzword for a professional examination. But this is important usually for a graduate students and BCom level. This is important. At a professional level, I don't think somebody will ask a question like this. Nothing but what are advantages with auditing? See, the side headings are give a meaning for you, sir. First one is legal point of view, filing of income tax returns. No income tax department will accept income tax returns unless it is properly certified by CA. Client point of view. Individual point of self-assessment is that you can do it. But income tax authority should accept means that authoritative manner. So audit is important. See that one? Income tax authority generally accept profit and loss account has been prepared and qualified auditor, and they do not go into the details of account. Once auditor certify, simply accept. Individually, senior accountant signed, again verify it. Second one, borrowing money from the external sources. As already told yesterday, if I want to borrow loan from a bank or a financial institution, contacted them. What they say? Auditor's certificate. Projected profitability for next 3 years or 5 years report I want. Then definitely auditor's importance is there. So here, money can be borrowed easily on the basis of audited balance sheet from external sources. Most of the financial institutions sanctions various loans on the basis of the audited financial statements. And the statement of insurance claims in case of a fire insurance, or theft insurance, or marine insurance, if you want to claim, report has to be given by auditor. I don't think I have to read out. I will rush up. And other one is sales tax payment. And other one is acting against the bankruptcy. If you want to file a case under the IBC, Insolvency Bankruptcy Code 2016, your report shall be signed by one auditor, not a self-declaration. One competent authority has to certify in order to claim your bankruptcy proposals. And for internal control point of view, so far from outside the world, now it is internal point of view. Quick discovery of error and fraud, especially internal audit is there. It happens on a regular basis. So speedy detection of the error and fraud. Then and there corrections will be there, and you can say that end of the year, reliance can be placed on the information generated by the management from that point of view. The error and frauds are located at early stage, so that in the future no attempt is made to commit such fraud, as one rather careful not to commit an error or a fraud, as the accounts are subject to regular audit. Best example is internal audit or a continuous audit. In the types of audit, these points I will explain much more. So whenever there is internal audit, every fortnight, every month, audit will go on. In the very first month, fraud was detected. Who does the fraud? Already identified. They gave the warning, be careful man. Will he dare to do fraud again? Because every month it will happen. Once in a year audit is there, I can do fraud. That's called as one is the continuous audit, second one annual audit. Annual audit ought to happen once in a year. In the very first week of April, if I did some fraud, until 31st March, nobody can detect this fraud. In the meantime, I can resign and move off also. Isn't it? Chance is there, annual audit. Whereas in case of a continuous audit, or here every fortnight, 1 month audit is happening. Very easily they can, one time they can spare me. Second time also fraud. Will they spare me? Literally they can call the police. So thereby people will be very cautious while doing certain irregularities. Errors also. One time we can do error. Or every audit, first month, second month, third month, or continuously you are committing some errors. First time they will spare you. Second time they will give a serious advice. Third time, they doubt about your ability. You are not learning anything from your mistakes. Better that either demote or terminate. Better na. We want always the right person at the right place. Management also can act on that fairly. And other one is moral check on employees. Of course, if I did some fraud within fortnight, 1 month, it is going to be detected. People won't dare to do certain irregularity. They fear about it. Unnecessarily immediately, not in 3 months also. Next to 14 days, 15 days audit is there. No. People always resisted. This is also moral check. Simple example, class is exam. You are all writing exam. Will anybody cheat in examination hall? Yes, sir. Will anybody cheat? I don't think so. Not tried. Good people. Seriously. Because someone is monitoring you. Invigilator is there na. When invigilator is not there, internal check is there. Internal check, internal control system, internal audit, internal check. 3 words are there. What is internal check? No person is commenced and concluded the work. No person is commenced and completed the work. Which means I am only commencing the work. I am only completing the work. After the job is done, I have to submit a report. My report is final. And that there is no further check. Then I can do some fraud. Whereas my work is subject to review by another person. Then I will be careful. Because my work is going to be reviewed by another person immediately. Her work is reviewed by another person. Her work is reviewed by another person. 4 persons involved in a particular transaction. Fraud can be detected. If I did something fraud, she will detect immediately. It happens in a bank, see, and when you give a check, first you get a token, then it goes to the check will go to the one person, that person will pass it, then to second person, that fellow will sign. Nowadays, everything on system it is happening. And third person is the cash counter. 3 persons involved in front of you. All these the transactions are reflecting again branch manager's cabin. Whatever activities we're doing on the system, it reflects backend. So no work can be escaped from supervision by another person. So fraud and errors are not possible when there is a check. Nothing but my work is subject to reviewed by another person. Then I will be carefully work on that. It work like a moral check on employees. Auditing of a company accounts keeps the accounts clerk and accounts and accountants regular and vigilant, as they know that the auditor would complain against them if accountants are not prepared up to the date or if there is any irregularity. And advice to management: once the financial statements were used by only commercial banks, creditors, investors to take a decision. Today, the financial statements are used by management for a policy decision. They are taking it for policy decision. Their point of view, this plays important role. A genuine information I want, I can take a timely, qualitative decision to grab the opportunities in the society. And check this one. It may happen that management may consult the auditor, seek advice as certain technical points, although it is not the duty of auditor to give a advice. And uniformity in accounts: if accounts have been prepared in a uniform basis, accounts of 1 year can be compared with the another year. If there is a discrepancy, this cause may be inquired. This is called, remember, analytical procedure. Under wherever you come across one word, analytical procedure, the word is there, remember, comparative analysis. Comparative analysis of the financial statements. For example, 2000, 2001, 2002, 2003, 2004, your data can be compared. Capital employed, how much here, how much here, how much here. 3 years data, 5 years data, if you are able to compare, what they say, 5 years. Current year, previous year 1, previous year 2, previous year 3, minimum 3 years. Current year compare with previous year 3 or maximum 5 years. You know what is happening in this company. It reflects clearly. What is our current capital? Paid up capital 1000 crore. Last year 800 crores. Difference 200 crores, which means current year public issue 200 crores or rights issue 200 crores. We have to examine that. Last year, current year salary paid 15 crores. Last year 10 crores, minus 5 crores. Why? Immediately your attention will go there. How much increment was given? What is the reason? First of all, how many new employees are appointed in this year? Your question should be not appointed. Very good. Then how is that salary increased by 50%? Increment may be 10% to 15%, but not a 50%, isn't it? You can question on that. Whenever there is a material discrepancies were there, rent paid, current year rent paid 20 crores, last year rent paid 12 crores, means minus 8 crores. Immediately can ask them, did you take any building for the rental purpose for current year? No. Then how is that 8 crores excess paid? Can I see the rental agreements? What is the rate of increment? Why it was 8 crores? Auditor can easily suspect certain transactions. Sale of the scrap, income from the junk material. Sale of the scrap, current year income from the junk material 2 crores. Last year 50 lakhs. But how is that minus 1.5? How is that you got more money? So wastage is more current year. Why it was happened? So whenever comparison is there, that will really handy to know ourselves. Organization also no exception. 10th class, what is our percentage? 99%. Intermediate, 98%. Degree first sem, 60%. Second sem, 70%. Third sem, 50%. When you compare this, can't you see some differences? 10th class, you got 99. My God. Inter, 98. Super. Consistency is there. When it comes to the degree first year, how is that only 60%, minus 30? What happened, man? Suddenly something, any golden wings are there. Where are you flying? That's why one should know. Where did things went wrong? This analysis really helps us, and trust me. Thing is, honest analysis and correction is important. Corrective measures are important. If you are able to take it, you are successful. Otherwise, we will end up somewhere, and everybody will do this, I think so. So, analytical procedure, nothing but a comparative analysis, and this is any discrepancy can be inquired. For external point of view, settlement of accounts, which would facilitate the settlement of accounts for the deceased partner. A partner died, we want to pay back to him. Settlement of accounts, audit is compulsory. Next one, valuation of assets and goodwill. If the business is to be sold, sale of the business, you have to know what is the value of the goodwill and all. Audit is compulsory, guys, ongoing basis. This may not be much difficult regarding the valuation of assets and goodwill, as the accounts have been already audited, an independent person. And a future trend of the business, from the audited books of accounts, future trends of the business can be easily assessed. Based on the current year data, can't we analyze the trends? Trends can be ratio analysis. Have an idea? Ratios will help us to know past as well as future can be predicted. It will be handy for us to know what's going to happen for next 2 years to 5 years up to level. We can forecast. Forecast can be made. Advantages of auditing. What is the advantage of audit? And first one, audit is a tool with the different stakeholders. What are the stakeholders? Stakeholders, shareholders, investors, creditors, customers, employees, competitor, society. These are all stakeholders. Company versus outsider. Simple example. Company versus outside, everything, everyone who is other than computer, company is nothing but a stakeholder, can use to protect their interest in the enterprise. Audit is not only corrective measure, but has a different effect. It serves as a moral check on employees from the committing any kind of a defalcation, nothing but a material misstatements or a irregularity. Embezzlement. What is embezzlement? Embezzlement, fraud. Fraud is a huge word here. Embezzlement means loss. Give an example. Embezzlement means loss only, but I want example. Theft. Okay. Right word I am waiting. Yeah, tell me. No problem. Loss only. Okay. Embezzlement, remember, cash loss. Wherever embezzlement word is there, this should be our answer. Cash loss. From the cash counter, 1000 rupees is missing, 5000 rupees missing, 1 lakh rupees missing. Did you stolen anything from your parental pocket? Wallet? From the dad pocket, 5 rupees, 10 rupees, 50 rupees, 100 rupees. Yes or no? Yes means natural. No means unnatural. Hey, I am not encouraging. Steal something from your parents. Chill. Just I am kidding. So, embezzlement is a nominal amount, so not a use amount. Use amount is there, your word. Fine. And employees of organization remain alert, diligent as regard updating of the books of accounts and other documents, because we know every month audit going on. and work has to be finished. Otherwise, we have a tendency tomorrow entries they won't write, they won't give the proper posting, balances won't be done, casting won't be there. I think routine check is there. They won't do it properly. When audit is there, they have to complete the task timely, because surprise audit is there. Surprise visit, I would say rather. Surprise visit. Suddenly auditor will come, show the records. Unless books are not ready, I can't show it to him. So that's the element of the surprise visit during the audit is mandatory for every auditor. Of course, desirable practice where outset auditors will do. And employees of organization, of course, audited accounts are considered as more reliable by different cadres of government, for example, tax department and all. Same points repeated again. It facilitates the detection of the wastages and losses, which will help in instituting the corrective measures. Audited accounts are taken into more reliable and useful during the corporate restructuring exercises and evaluations, etc. Banks and finance institutions, government audited accounts before granted by the financial assistance to the enterprise. And audited accounts are to be more helpful for the settlement of accounts between the partners and avoiding the dispute among them. I don't see importance from examination, but still you have to learn it since it is there. Now guys, what are the inherent limitations of auditing? Inherent limitation. This is very, very important from examination. So for 2 questions I said this is going to be third question. True and fair view important. And other one is the objectives of audit. Third one, inherent limitations of audit. This is the heading. That heading only question for you. What are the inherent limitations? Now listen guys. As already we know some points. Management is responsible for selecting appropriate accounting system which is suitable. Second, designing and implementing the internal control system which is suitable for the size of organization. Third one, appointing a right person at a right place within the entity in order to execute the directions given by them. What is the guarantee? The management has selected the proper accounting system. They maintain the books of accounts free from any kind of window dressing. Third one, the internal controls are defined by whom? A qualified, competent person or management itself. If there is a right person approach is there, it would be different. Who designed and executing this? And internal auditor always will tell in internal organization, internal control, these are the weaknesses involved and how to overcome. Auditor is a doctor for the financial health of organization. He knows how to diagnose, he knows how to cure it. Similarly, internal auditor knows internal weaknesses of entity and he reported the management. He gave the valuable suggestions also how to overcome. As an auditor, I go for audit. I am collecting the data, information, records from the management. This data may be false data, manipulated data, otherwise the window dressed data. Second, internal controls were defined. Best internal controls are defined. But those internal controls, who should implement? Employees only. All fingers are not equal. All employees also not equal at integrity, honesty. Isn't it? Some people may yield quickly for the sake of money. Some people may wait for some time. Who knows? He said, I'll give you 10,000 rupees to do this. He may do it. I said, I'll give the same thing, do it. No. I have honesty. Okay. 50,000? No. 1 lakh? No. 2 lakh? No. 5 lakhs कब से करने का है? For everyone there is one price. So this data, how can I relay? You are giving some data, but employees who are working don't have honesty. They don't have integrity. All of us take the bike, go on the road, and 99% wait on the borderline. Signals for red light is there. 99% will stop and beside the line. But one guy will be there who is to break that line and move off. 1% break, all will follow. Noticed? At least 50% will go along with him. When he is able to go, why can't I go? Noticed? But there are some people, 20-30 people will standing like this only. Noticed any time? Here also apply the same principle. In the organization, reports are, employees have to implement rules. I can't expect a similar amount of honesty. Since you are an honest person, I can't expect that every employee is honest here. But your data I am going to examine. I don't know whether you are really prepared following the rules or not. Again, audit means 100% auditor. It is not a post and watch. Means voucher posting, voucher posting, voucher posting. Each voucher I am not going to examine. What I will do? Test checking. Auditor will do only test checking. What is the test checking? At a random, he will select a few transactions. The selected transactions from origin to conclusion, I will verify. If that is representing true and fair, I would say entire populations are representing true and fair. Here population means transaction. Remember, in auditing, if I take the word population word, I am using the word population means I am referring to transactions. Please remember, in auditing, if I am using the word population means not India population, China population. I am talking about transactions. For example sake, sales are there. Numerous sales sending throughout the year. Is it really possible to check each and every transaction? Then what I will do, sales are classified less than 1 lakh into one group. Again, 1 lakh to 3 lakhs into one group. Above 3 lakhs into one group. 3 categorizations I considered. Example say. Above 3 lakhs, use money, 100% vouching. All the transactions verify, use money now. Then second one, 1 to 3 lakhs. At least 50% of the transactions we have to vouch. At least 50%, means even next transaction. Third one, less than 1 lakh. These are huge number. Here what I will do, at least 20% of the transactions I have to do vouching. At least 20%. Minimum 20. How many transactions are there total per annum? 20 lakh transactions are there. In 20 lakh, 40% means only 4 lakh transactions I am going to check. The remaining 16 lakh transactions I am not checking. So this is the test check. At a random, I am selecting one transaction. Every 10th item, every 20th item, every 18th item, a random number, you can choose one number. Or every 30th item, because all the list is ready, na? Every 38th item you take it and examine. Altogether 20% of populations are examined. Based on that 30%, 20%, I am certifying that entire population representing true and fair. That 30% or 20% is going to be a representative sample only. Is my justification is going to be correct? Once I did the audit, gave a report, can I certify that this is a viable certificate? Company got a huge profit and I am giving the certification. Yes, net profits were this much. Is this the guarantee certificate for the future performance of the company? This year profit is there. What about next year? I don't know. But based on my report, investors are taking a decision. Auditor certificate is not a viable certificate that next year also same profits will be there. I am doing the post-mortem. Already 1 year completed. On the completed transactions, I am giving a report. Regarding future, I don't know. How can I give? This is the limitation. Regarding management efficiency and effectiveness, can you give a certification? This year, your profits were increased by 1000% because of the best management. Can you give certificate? This is the certified. Yes, management is the best. This is the viable certificate. This year you work hard. Next year, any guarantee people work in the similar lines? I don't think so. There is no viability certificate from auditor. And other one is, I am doing only test checking. What is the test checking best example? And we are cooking the rice. Do you cook the rice? Will you help your mama? Good, then you will understand better. When you are cooking the rice and mama will touch 1-2 pieces like this, she would say finish. First time when you are cooking, we have to stand there for 10 to 15 minutes. First time now. Ask your grandmother. She was sitting somewhere in the bedroom. With the smell only, she will say, already food finished, stop it. Don't off the stove. With experience, later on, you will learn something differently. But whereas test checking whether that rice is prepared or not, we are not touching each and every piece of the rice. At a random, 1-2 pieces we will touch and say finished. I want to buy 1000 bags of rice. Will I see all the rice? I will take some handful rice. Satisfied, ordered. Sample. Here also, test checking is a sample. Now, what I am trying to say, knowingly, unknowingly, I have selected transaction. The selected transaction only correct. The remaining all false. What if? But I am giving a certification that this financial position of company was superb, isn't it? I am using the language knowingly or unknowingly. I am selecting a transaction where there is no irregularity. The selected transaction only correct. The remaining all false. But I am certifying that is representing a true and fair. Other one, vice versa. The selected transactions only false. The remaining all correct. Probability is there or not? Because the basis I am going to select, that based on that I am certifying, test checking, and nobody will do 100% audit. It's just impossible. Not viable, not feasible. Unproductive expenditure. Now, why unnecessarily? At a random, we can select it. But that is one of the limitation for auditor. Test checking is one of the limitation. Again, audit evidence. Evidences are 2 types. Down to 3 years we met again. Hey, what are you doing? Sir, I am working for shipping corporation, cost accountant. Now my salary 26 lakhs package. Are you passed exam? Sir, working sir, cost accountant. Not believing. Then what to do? Take your mobile. Certificate is there, na? Batao. Evidence is some proof. Prima facie evidence. Regarding transactions also, vouchers are available. We can examine that. So there are 2 types of evidences as I told in yesterday's session. What is the first one? Internal evidence. Second one, external evidence. Internal evidence. Evidence generated internally, laying internal. External. Evidence generated externally but laying internally. When both the evidences are available for a particular transaction, auditor can more rely on external evidence. For any transaction, internal, external, both the evidences are available. I can depend on only external. When external is not there, internal. When no evidence is there, management representation or letter of representation. No evidence, no entry. No evidence, no fundamental rule in this. Are you going to verify all the transactions? No. At a random, I am going to select that evidence may be, not a conclusive evidence. Pervasive. Pervasive means incidental. Incidental but not a conclusive. Conclusive means final evidence. That is not available. Only at different areas it is available. One transaction affecting in a multiple places. Best example, some transactions will come in trading account as well as balance sheet. Some transactions will come P&L account as well as balance sheet. Some transactions directly appear in balance sheet. Multiple places you can see that. So each place you can collect some evidences. There you can know the genuinity of the evidence. And the inherent limitations of internal control. What is the inherent limitations of internal controls? See this example, and the certain levels of the management may position to override internal control. You are the CMD, chairman cum managing director of a company. Mr. X is a accountant. You asked him, bring the 20 lakhs cash. What is the internal control? To whomever you want to pay the money, first voucher has to be signed, sanctioned and signed, then only payment will be made. That is the rule. Rule is sanction, second signature, then payment. Your MD is asking, hey, give the 20 lakhs cash. Cash like how? Will you go to the sanctioning authority with a voucher? Will you ask your MD first to sign, take the money? Are you have guts to ask like this? Sir, voucher, बाद में देख लेंगे, पैसे लेके हो पहले. You ask still you dare enough. Sir, we have to sign the voucher. I can understand your sincerity. Good. You are not sparing anyone. First bring the cash, urgent. Still can you insist? Some levels are there. We can't utter something and we have to accept it. Top level executives especially, they have override. When Prime Minister is going, all the traffic will be stopped. Why? He is above common person. Huh? He is also after a human being only. Na? Why so much preference and priority? But ambulance is coming everywhere, we will give the way. Preference is there because life and death question, we will appreciate. Why Prime Minister and Minister, MLA, Corporator also? Shameless people. You know? My personal opinion. Okay, chill. So, what is the inherent limitation here? First one, internal controls may be defective, evidences were not sufficient, and here one word is there. Let me put this way. Sufficient appropriate audit evidence. Sufficient appropriate audit evidence. This phrase will come repeatedly in auditing. What is the sufficient? Number of evidences, nothing but a quantum of evidences available. Appropriate means pertaining to entity or not. Let us see regarding purchases. How many evidences are available? And you want to buy the raw material. Sanctioning authority will sanction. Proper person must sanction to buy the material. Second, placing of an order. Third, at gate entries are made. Third, fourth one, stores ledger entries are made. Fifth, at accounts department entries were made for payment. At 5 places, information available. At 5 places, you can gather the evidences. At all 5 places, sanctioning authority, placing of an order, receiving at a gate, entries at stores ledger, and plus payment from accounts department. When you bring all the 5, these are called sufficient. Collect all evidences. All evidences information is one and the same. You can rely on that. Sanctioned to buy 10,000 units. Order placed only 8,000 units. Received 6,000 units. Payment made 10,000 units. Then you can see the material discrepancies. All places different figures you can see. When you are sanctioned 10,000, ordered 8,000 and received only 6,000. Later, did you receive 2,000? No. Then why did you pay for 10,000? Since sanctioned. So remaining 2,000 units fraud or 4,000 units fraud. That's why you have to collect the evidences. All 4 or 5 quantum. If you are suspicious as an auditor, if I am suspicious, collect all evidences. Definitely can get one clue on that. Sufficiency, nothing but a number of evidences, quantum of evidences available. Appropriate, pertaining to entity or personal. And you can see the audit evidence. Sufficient, appropriate audit evidence. Nothing but a validity of evidence is more important. Then and there somebody can write on a paper and sign. Will you accept it? Thereby. This is internal control, some limitations. Management may override the internal controls. First up to here we finish up, then continue further. Limitations are there. According to SCA 200, the objective of audit is to express opinion on as to the true and fair view of the financial statements. The user should not believe that this option is as assurance to the future viability of enterprise. Nothing but you have certified the financial statements as an auditor. This is not a viability certificate for the future. Means same performance will continue for next year. I am not certifying. Regarding the enterprise, viability of enterprise, the efficiency and effectiveness of the management has conducted the business affairs of the enterprise. If I certify the financial statements, this is not a viability certificate. Same profits will be there next year. Same amount of the management performance will be there for next year. I am not giving any assurance for the future. I was verified the past data certified. Regarding future, I am not giving any kind of a certification. Only analysis and assumptions can be made, but no guarantee. Same thing will repeat in the next year also. And again, the scope of audit is determined by the terms of engagement and requirements of the relevant legislation, pronunciations of ICAI. What does that mean? Scope of audit, do's and don'ts, what is to be done, who will decide? Auditor's engagement. I am appointing you as my auditor. I would say this is what we have to do. Or you are auditor according to Companies Act 2013. What auditor has to do, scope of audit, company law already defined, you do that. Otherwise, sometime ICAI is giving the various pronouncements, we have to follow these three. And the ICAI, thus, appointing authority cannot restrict the scope of audit. Who is appointing authority? Shareholder. Always remember, friends, auditors are appointed, reappointed, fixation of remuneration, removal of remuneration, removal of the auditor, increase in the remuneration lies in the hands of shareholders at annual general meeting. Auditor's appointment, reappointment, remuneration fixation, increase in the remuneration, removal. Everything lies in the hands of shareholders only. Except a government company. In case of a government company, C&AG, Comptroller and Auditor General will appoint the auditor. Fine. So in this case, the scope is, once I am appointing as a shareholder, can I restrict your scope? No. As per Companies Act 2013, scope already defined. You cannot restrict that scope. You can't increase it. You can't reduce it. Whatever law said, let the auditor has to comply it. And as to the matters which are prescribed by the relevant legislation pronouncement of ICAI, while auditor is responsible while performing and expressing auditor's opinion on the financial statements, the responsibility for the preparation is that of the enterprise. Management responsibility includes what management has to do. Management has to do maintenance of adequate accounting records and internal controls, selection and application of accounting policy, safeguarding the organization. And the audit of the financial statements do not relieve the management from the responsibility, despite the guidelines given by ICAI. It's a very important note. The following are the inherent limitations of the audit. In that first one, test nature of audit, because 100% watching is not there. Simple example to understand. You remember banking company, insurance company, transport company, electricity company. For them, 100% watching is possible. Per day, how many transactions? And per annum, how many transactions? Is it really possible? Each and every transaction they can verify? Just impossible. That's why test nature. At a random, we select a few transactions. The selected transactions only we are verifying. Based on that, we are drawing to one conclusion. The selected item may be right, or we may draw the wrong interpretation on that. And the audit evidence available to auditor is a pervasive rather than conclusive. And the inherent limitations of internal control, that is, top level of the management may override the internal controls. And other one is, this is fourth question, very important, short answer. You have to learn it. Professional skepticism. What is a professional skepticism? Listen, guys. What if there is a fraud? I have done the audit, but still I took all the proper steps and reasonable care was taken. Properly planned, audit plan, audit program, audit working paper, right persons are hired as my assistants. I did the work in the best way, but still it is not 100% audit. Then what if any fraud was not detected? That attitude is called professional skepticism. You are writing your examination in the month of December. Prepared. You are ready for exam. Almost prepared. But still somewhere you think, is there anything missed out? Did I miss anything? Again, go back and see all the heads once. What if I miss anything? At 11th hour also we are turning the papers. Why? What if any point did I miss it out? Here else I have done the audit. What if there is a fraud? If I am unable to detect any irregularity, then what I will do? I have done the audit. Then I will ask my colleague, do it again, test check. Means I am asking my another colleague just to check it once. Then he will choose his own basis, not my basis. At a random, he will select a few transactions. Fatafat he will do. He will say, correct, go ahead. Then I can, yes, I have done a good work. Here also say, what if there is anything wrong? I don't know how many of you noticed it. Application form is filled by you thoroughly with utmost diligence. After completing form, before you submit, you ask the neighbor person, check it once. Why? You don't know your mistakes sometime. We don't know our own mistakes. Our application, you give it to neighbor person, hey, check it once. That fellow will sit top to bottom again. Currency also, we count it. Again you give it to, hey, count again. Who knows, one note extra also gone, na? Maybe more, maybe less. We ask the neighbor person, check it once. If anyone is there, I don't know, will you ask? I will ask the person. Count one. They counted, again I will count. Who knows? Because I should not give less. I give 1 rupee more, doesn't matter, but less means they doubt us. So what if? That's called attitude of auditor. That attitude really help him to give the best work sometime. Let us see. Professional skepticism means an approach that would ensure that if something is wrong, it is detected. Is there something wrong where I fail to detect it? And this behavior of auditor helps him in identifying and evaluating matters that increase the risk of the material misstatement from the fraud and error. If I don't detect a fraud, my risk will be more. Auditor risk is 3 types. Later part we will discuss. Inherent risk, detection risk, control risk. 3 types of risk is there. We will discuss later. Audit risk will increase if I don't detect it. Detection risk, if I really planned well, probably that risk, that fraud or error would have detected my mistake as an auditor. And second one, circumstances that make the auditor to suspect the material misstatement. Is there any suspicious transactions within the entity where I missed out? To know that, what you have to do, conduct a analytical procedure. Your company balance sheet also, you remember, you can see current year as well as previous year. Why previous year data is available to you? Always you can make a comparison. With that you will understand, is there anything abnormal increase or decrease? Minor variations always expected. Abnormal fluctuation can be easily detected and focus will go there to know, is there any genuinity here? And third question, the question of the reliability of management representation. What is the management representation? They are giving representations. You do this, you follow this, they give some clarifications and explanations on that. The auditor is entitled to accept the records and documents as genuine unless there is some evidence to the contrary. Auditor believe whatever evidences are genuine one, unless I am suspicious, contrary evidences are available. Important, and please butify. I am using this word. Learn it word to word. If question is given for 4 marks, should secure full marks, please. Other one is materiality. What is the materiality? Remember, substantially affecting. Concept of materiality. This is if the transaction is going to substantially change. Individually, the effect may be negligible. In an aggregate, it is a huge amount. How do we understand? For example, for payment of bonus, we are paying bonus to employees. For each employee, by mistake, we have paid 5 rupees more. By mistake, 5 rupees extra paid. Each employee 5 rupees. Per employee 5 rupees. Negligible. What is there? Let it be. But how many employees are working in our company? TCS 5 lakh employees are there. 5 lakhs into rupees 5. How much? Sorry, 25 lakhs. 25 lakhs. P&L account or profit is reduced by 25 lakhs. Will it affect our ratios or not? When you calculate the net profit ratio, turnover ratio, debt equity ratio, it got some effect or not? Then, is there materiality? There is a material, substantial affecting. While paying the gratuity, each employee, I paid 100 rupees more. 100 into 5 lakh, how much? 100 into 5 lakhs, how much? I don't know. 5 crores. Zeros na yaar, zeros se connect. 1 crore means 7 zeros. 5 lakhs means 5 zeros. You add 2 zeros. You know? 5 crores. P&L account debit side. Negligible amount. Materiality. Individually negligible. But I had 100 rupees, no problem. Transport company, remember costing, operating costing, you know very well. How to fix a price per kilometer. Per kilometer, if I fix 10 paise less or 10 paise more, it got a repercussions. In case of a textile industry, per meter, 1 paise more or 10 paise less or more. Imagine the repercussion. Per meter, 1 paise, negligible only. But when it comes to aggregate per annum, how many meters were produced? Crores of meters and sold in the market. It may be gain or it may be a loss. That's why materiality, concept of materiality means substantially affecting. One more example. One person, Mr. X, is appointed as a director of a company. Monthly salary 20 lakhs. He is the director finance. After 10 months, he was removed from office by the court. Somebody filed a case. He is not a competent person. Through the back door, he was appointed, removed. Court is satisfied, said remove him. Because on illegal grounds, he was appointed. After 10 months, removed. Per month, how much salary paid? For how many months? How much salary? 2 crores. Unproductive expenditure. Is this not material? First of all, to appoint a director, we have to, there is procedures, na? Appointment by board of director, appointment by shareholder, appointment by government or a small small shareholders director and all. I think you remember these points. Then how is that you are appointed a person unlawful methods? Is this not unproductive expenditure? My profits were not reduced to that extent. Yes, materiality. And can you recover this money? I don't know how many of you knew, recently in Andhra Pradesh, 33 professors were removed from various universities. And they worked for 4 years as a professors. Monthly salary around 3 lakhs. And 33 professors for various universities after the YCP government came into power, appointed. Somebody filed a case recently, 1 month before, the Andhra Pradesh High Court given the judgment, remove them, recover the salary. Use money, na? Negligible amount means okay, Baba. Backdoor methods, people are appointed as a professors. They withdraw the salary 33, average 3 lakhs per month, 3 lakh into 33 per month, almost 100 crore, 1 crore, 100 crore, how much? 33 into, huh? I don't know. Huh? 3 lakhs, 90 lakhs, 1 crore, 1 crore into 12, 12 crores, 12 into 4, 48 crores. Pay. Now the professor's problem is, already we spent that money. How can you ask me now if we repay? They filed a case. If you want to remove us. We can't pay back salary. But illegal grounds you took that salary, na? You are not eligible to get that salary. The case going on in Andhra Pradesh High Court. Present. That's one of the case. My point is materiality. When it is a concept of materiality, this is also important. And materiality is the basic fundamental concept in process of auditing as well as accounting. Auditor has to constantly, consciously judge whether the transaction is material or not. It is used by him in audit planning. Materiality means important, cost-wise, profit-wise, effect-wise, volume-wise, and which influences the economic decisions of the users. What is material in one circumstance may not be material in another circumstance, and therefore changes need to be done accordingly. Okay? Inherent limitations of auditing. Please prepare these points. And now the tomorrow's session we will take up these points. Accounting, auditing, auditing and investigation. These 2 questions, if you perfectly prepare, pakka 1 question will come. You take any previous question paper. Usually you can't see a question paper. So far 4 or 5 questions I told you. These 5 questions, if you prepare, pakka 1 question will be. Take any question paper of auditing out of these 5, including these 2. You can see one question. So unit 1, half of the topic we are completing by tomorrow. And please learn. Don't postpone the things. Thank you guys. This is for the day.